Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, checking the market rundown, SPY, IWM, and QQQ on the daily and weekly time frame. So the bears staying in control with a lower high and lower low pattern. In control of the short term, of course. The long term, the bulls still have higher lows. I'm looking at two key support levels, 236.01 and 235.41, and the middle Bollinger Band is going to be thrown in the mix as it continues to ascend. Next, or I should say tomorrow, it's going to be at about 235.60 or so, so we'll have to keep updating that level as well. Definite some weakness with a loss of all hourly moving average supports towards the end of the day. And then we saw a weak bounce attempt where we rejected on the back test of those moving average resistances in the low 237s. So that was a bearish entry opportunity towards the end of the day. The back test and rejection from those resistances leading to another fresh dump and a close down near the lows. So again, close down near the lows has not happened often in 2017, and we have seen it now again today. The start of this consolidation, we saw a close near the low, and now we're seeing it again. So the bears are in control of the daily time frame and the hourly time frame with all hourly moving averages resistance. But the bulls are still holding on. And a point that I can't disregard is if you were to tell me yesterday that oil was going to drop over 5% today, I would say, uh-oh, the SPY drop is going to be at least 1%. We're going to see a big time dump to the downside. So this was the opportunity today for the bears to jump all over this market. And they were certainly in control with lower highs and lower lows. But in the end, down less than 0.2% on an oil down 5% day, that's a big time victory for the bulls. So we're going to have to see the bulls form a solid bullish reversal candlestick on the daily and break the lower high, lower low pattern to favor the bulls. Otherwise, the bears are going to remain in control. So short term, the bears are in control. Mid and long term, the bulls very clearly still have the uptrend in their favor. Weekly time frame for SPY after that upper wick. First time we saw an upper wick in 5 weeks. We need to be watching for the bearish reversal candlesticks to begin forming, and the low of last week 236.01 is still holding. We still have a higher low pattern on the weekly time frame. This has been in play for months, so 236.01 is a key support for the rest of this week because it would indicate breaking the higher low pattern on the weekly time frame if that level were to be lost. IWM continues to magnify weakness to the downside. I keep pointing out how it is the weakest name of the three, and if you are looking to play either SPY or IWM to the downside, so far IWM very clearly has been pulling back a lot more significantly. Right now, IWM is working on the range where it was back on February 9th, and if SPY were there on February 9th as well, we would be down at 230s. So $6 above that level still, nowhere near the kind of consolidation we've seen in IWM. Close at the low of the day. Next support is 135.25. Weekly time frame very clearly confirming the bearish reversal candlestick from last week, and definitely in control in the short term. All about this low of 133.12, middle Bollinger Band support of 133.38. Bulls need to form a higher low compared to that level to keep in control of this uptrend. If we lose 133.12, that's a big setback for this longer term uptrend, and we'll be looking for some more significant consolidation. And we'll be keeping an eye out for maybe some clues where IWM could be the canary in the coal mine, so to speak. If we do lose that level, we'll have to start keeping a closer eye on weakness in these other markets as well. QQQ still higher lows and higher highs the past 2 days in a row. That shows the strength of the tech sector still holding up. We came up to 131.15 today, and that is just 53 cents shy from an all-time high. So the bulls are still very strong on QQQ. Support from here is 130.21. Middle Bollinger Band continuing to catch up as we trade sideways now. And the bulls in control on QQQ more so than the S&P 500. So if I had to rank the daily charts right now, it would be QQQ, SPY, and then IWM in terms of bullish strength. You can see an inside candlestick on the weekly time frame. We've been forming higher lows on QQQ for months in a row as well, ever since the election, or I should say ever since the end of the year. All of 2017, weekly higher lows. So bulls still strong, tech sector holding up well, and 131.15 resistance. So I appreciate you checking in. Tomorrow we'll have to see if we continue to the downside on some solid bear volume. We are going to be testing some really key supports on the daily time frame for the short-term trend on SPY with that middle Bollinger Band in the mix as well. Thanks for tuning in. We'll see you tomorrow.